Tesla shares tumbled yesterday, closing down 12%, falling 27% for the year after more than doubling in 2023. When Wall Street analysts labeled the earnings call a train wreck and begged Tesla executives to start acting like children. For more, let's bring in the co-anchor of CNBC Squawk Box, Andrew Ross Sorkin. Andrew, I was so surprised by the numbers yesterday because you had a lot of tech stocks doing very well, a lot of other stocks doing well. Yesterday was a really good day for Wall Street, but a terrible day for Tesla. And what jumped out at me was that statement. It said, come on, guys, we need some adults running the place. What in the world happened?
Well, what I think is happening, actually, and to be honest, it's actually a much broader issue than Tesla itself, is we are seeing the beginning of what seemed like a growth market for EVs stall out. And we started to see this even earlier than this because, you know, we saw a lot of other American car makers who had gotten into the EV market say that they couldn't sell the cars that they were making. And the pledges they had made around goals of how many cars, EVs they planned to make, they weren't going to hit them. And there was a view that Tesla was going to be, you know, immune from all of this, that Tesla was in its own category. But it is clear that there is a broader issue here from the American public about EVs and just how quickly we're going to see true uptake about these electric vehicles en masse. You know, I think there's still a lot of, you know, what they call range anxiety. People are worried that, you know, if I buy an EV, there's not going to be an infrastructure. There's not going to be a place to charge it quick enough. Well, and I think that's going to become a larger and larger issue as the investment in this space has taken place. If on the if on the other side people don't want to buy them, that's a problem.
So let's talk about what you were, you know, the range concerns. We got headlines that a lot of EVs weren't working in cold weather. There are a lot of things that are really exasperating to people who may want an EV, but they also want to know they can get in their car and they can go. And, you know, and there's going to be charging stations and everything else. You also have, of course, competition from China in this area is particularly fierce, right?
Particularly fierce. And in fact, one of the things that Elon Musk said on his call with investors, which was surprising given, in fact, that he's got a big business in China. He said, you know, America's got to keep the tariffs on vehicles coming into the country from China, because the truth is he believes that the vehicles being produced in China are better than the cars being produced in the U.S., with the exception, he said, of Tesla. And when you think about some of the products and just feature sets in some of these Chinese EVs, the electronics, the computer systems, they are just next level. They are. And it raises some real questions. They're also obviously being produced at cheaper prices in China. So we do have tariffs in place that in truth are going to prevent them from probably becoming a bigger part of the market here. But nonetheless, you can see that distinction taking place. And raises just questions about climate and how all the investments that are being made in climate and what's and what that long term is going to mean.
And before we let you go, though, we've talked a lot about a lot of outside forces. That's not what was happening on the call yesterday. On the call, it was a question about Elon Musk's leadership, the board's leadership, the need for, quote, grown-ups. So, yes, we have a problem with the environment around EVs. But yesterday, the collapse was based around the fact that, you know, a lot of shareholders just don't trust Elon Musk and the people he has around him.
I don't know if that's the case. The truth is, I think it was about the guidance, the truly weak guidance that they offered. And I think scared people. There's no question that people question the management of how Tesla's set up. I think there's a bigger question, you know, to the extent that the valuation has never been a car company. It's been an AI company, a tech company, and all sorts of other things. One of the things he said is that he wants to have a bigger stake. He wants more control of Tesla. He wants the board to give him more control because he believes that he needs to control. If they're going to invest more in AI, he wants to be able to control it, and is basically saying, by the way, that he's going to walk, or he's going to actually take some of that the AI investments, or the AI investments he would otherwise want to make inside Tesla, he would make outside of Tesla. So I think that that's also part of the calculus here in terms of what's happening to the stock.